Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, the setup globally is looking pretty fine, but the GIFT Nifty was hinting at a mildly lower start for our markets. But yesterday, remember, was the day of strength, and we saw the markets holding on to good gains throughout the session. In fact, we did end near the session's high as well. So 24,800, all eyes on that level. Whether or not we can clock in that crucial resistance zone is something that we'll be watching out for. Of course, also the fact that the bulls have made a strong fight back or comeback, so to say. But will that sustain? Because last week as well, in the middle of the week, we did see some bit of respite, but then that fizzled out. So this time, whether it has more legs or whether it was just a one-day wonder, that's what we are watching out for. But of course, lots of stocks in focus. IndusInd Bank, Rajiv Anand has been appointed as the MD and CEO. So that stock will be in focus. Paytm, there's likely to be a block deal in the counter. That stock will be in focus, and lots of other results today. The likes of Britannia and Airtel. So lots of stocks to watch out for, and of course we'll also understand the setup for the day from our guests who will be joining in later on in the show. But quickly take a look at the top headlines, and of course all your stock related queries, we will not forget about that. Keep them coming in, we'll get them addressed as well. Top stories at this hour. Well, Wall Street rebounds as indices claw back Friday's losses. The Dow gains almost 600 points, while the Nasdaq rallies nearly 2%. Asian markets meanwhile as well trade higher, with both the Nikkei and Kospi in the green. The GIFT Nifty although was indicating a mildly lower start for our markets. Crude oil prices slip as traders digest OPEC Plus decision to raise output amid growing geopolitical uncertainty. Traders are also watching out for possible US action against Russian oil flows. Meanwhile, gold prices extend gains on expectations of a rate cut by the US Fed. US President Donald Trump threatens to substantially raise tariff paid by India to the United States, saying India is buying massive amounts of Russian oil and selling it on the open market for big profits. Indian government response to Trump's tariff threats says the targeting of India is unjustified and unreasonable. Like any major economy, India will take all necessary measures to safeguard its national interests and economic security. IndusInd Bank shares will be in focus as the Reserve Bank of India approves the appointment of Rajiv Anand as the MD and CEO of the bank for 3 years. His appointment is approved with effect from the 25th of August, subject to shareholders' nod. And in key earnings to watch out for, numbers from Bharti Airtel will be in focus. The telecom giant is expected to report 2.2% rise in revenue on a sequential basis, aided by an increase in India's mobile business. Also watch out for numbers from Lupin and Britannia. Well, we did start the week on a healthy note. Yesterday, most of the sectors ended in the green. Metals and autos were leading from the front. Financials, however, were, subdued, so to say. The Nifty Bank Index was largely or marginally rather in the green. It has, of course, underperformed the benchmarks. The mid-cap index saw broad-based gains. So the mid-cap index was up almost 2% yesterday. The market breadth was firmly in favor of advances. Metals, were surging yesterday on hopes of a rate cut by the US Fed. So you had the likes of Tata Steel, SAIL. These were among the top gainers. Two-wheelers also saw very good traction, with Hero Moto emerging as the top Nifty gainer yesterday. Of course, July sales have been much better for two-wheelers, and of course we have the festive sales season, that kicks off this month. So yes, on optimism, we saw the two-wheelers in the fast lane. Defense stocks saw renewed buying interest at lower levels. We had BEL as among the top Nifty gainers. IT stocks saw a big recovery yesterday. Although they started the day on a weak note, but we saw a good 2% gain on the IT index by the end of trade. Some of the result reactions were there, the likes of ABB India that slumped on the back of weak numbers and weak commentary as well. But Ather Energy, that stock was up I think 15-16% on the back of steady numbers. In terms of fund flows, foreign investors were net sellers. They continue to be net sellers. They sold shares worth over 2,500 crore rupees in the cash markets. DI buying support continues. 4,300 and 80 crore worth of shares bought in the cash market. In terms of put call ratio, jumped to 0.94 vis-a-vis 0.75 in the previous session. And one stock in the FNO ban, PNB Housing, that stock has got badgered out of or hammered out of shape over the last two sessions. Of course, that stock will be in FNO ban. But on that note, let's understand the setup for the day and for the week ahead. Joining me is Hemen Kapadia, technical associate at DRChoksey Finserv. Hemen, speaking to you after a long time. 24,800. That we are training our eyes on that key resistance level on the Nifty. Do you think the strength that we saw in yesterday's session will continue, and 24,800, is it very much on the anvil today?
A very good morning to you, Nandita. Thank you for having me on the show. It's always a pleasure. And yes, it's been ages. We should do this more often. Yes, I think 24,800 is possible. Just a couple of points. The VIX has gone up from 10.5 to 12, which is still not significant, Nandita. The US VIX, CBOE VIX went from 15 to 22. And we've come off significantly from the high of 25,670 to almost 24,500, and that too over a period of 6 weeks. So we've had a decent time price correction. As of now, 24,492 level is, I wouldn't say make or break, but quite important. If that decisively, I mean, it's not an intraday breach that I'm referring to, Nandita. I'm saying a closing. That could create problems. So as of now, I think what you said, 24,800 is there for the taking. And if that happens, we should be going to 25,000. But things should improve only and only if we sustain about 25,212. So as of now, we're looking at a 5-6 week decline, Nandita, and a bounce. So the setup is for a recovery and not a rally. And just to digress a bit, the IT index is deeply oversold. A bounce is coming. So I believe that would help the Nifty in terms of market movement and weightage, Nandita.
And what about the Nifty Bank Index? Do you see the setup looking better there? Because we've seen underperformance coming in on the Nifty Bank in the last couple of sessions.
Well, frankly speaking, Nandita, it's flattered to deceive. It gave a breakout, posted a fresh all-time high. One would have assumed that it's begun a journey towards 60,000. Now, that hasn't happened. We saw a sideways movement, which only on the hindsight we can label as distribution. Whether it's the Nifty or the Bank Nifty, but specifically Bank Nifty, Nandita, all the mechanical indicators on the weekly chart have signaled a sell. So what you said, very valid observation. It has shown weakness, and it doesn't seem to be in a screaming hurry to rectify the situation. Once again, 57,500 to 55,500 points, 5,700 bounce. It could be in the offing, but the medium-term picture has taken a hit. So I believe there's going to be some wear and tear, and we're going to take time to recover.
Okay, that's the view. Take some time to recover, but since you're talking about the banking index, IndusInd Bank will be in focus. It has announced the appointment of Rajiv Anand as its new MD and CEO. Of course, the news came in late last night, and Rajiv will be appointed for a 3-year tenure, which means he'll remain at the helm of affairs at the bank until August 24, 2028. Now, of course, that has been an overhang on the stock, but the stock did see a very good recovery after, hitting 52-week lows or, lows of somewhere around 606. We've seen a good recovery coming in from there, but last week as well, the stock was under pressure. At this juncture, what are the patterns that you're witnessing when it comes to an IndusInd Bank, Hemen?
Okay, two things, Nandita. If I take a slightly longer term view, it peaked in 18. Bank Nifty, a lot of stocks have made fresh all-time highs. So 7 years of woeful, abysmal underperformance, which doesn't seem to go away. That's a very longer term view. If I take a shorter term view, yes, as of now, 780 is decent support. We're seeing a gap up opening coming in today. Bounce is underway. And frankly speaking, it doesn't look very good or bad. Yes, one thing is clear that we are oversold and quite oversold. So only if 780 breaks decisively, Nandita, would be worried. A recovery is on the way, but it's a struggling recovery, not very exciting. So we've seen a major fall where the fall was from almost 1,700 to 600. So even if it comes to 950, I wouldn't be surprised. So extreme short-term positive, medium-term oversold. Longer term also it is on a bounce. The long term, the underperformer tag doesn't go away in a hurry.
Okay, that's the view. But short term, things are looking good for IndusInd Bank. But another stock that will be in focus, it is likely to see a block deal, Paytm. Sources suggest that AndFin is likely to sell 5.8% equity via block deals. The block size is likely at 3,800 crore rupees, and the floor price has been set at 1,020 rupees. The stock has seen very good traction to edge back above that 1,000 level. Look at the last 1 month, the stock is up 16% already. Last 5 days, of course, seen some wee bit of profit taking. But what's your sense? Do you think it could make a dash at levels of 1100, 1120 or so, which happens to be its 52-week high?
I think, Nandita, slightly contrary view. I believe we are slipping into a correction. But like you said, yeah, let us wait for a reaction post the block deal. But the stock has moved from 660 to 1120, Nandita, over the last 6 months. 1, 2, 3, 4, 5. There's 6. Okay, not counted beginning of the month. But the short term, the daily charts seem to suggest impending weakness. There is some negativity creeping in. So I'd say 1100 intraday possible, but we need a close up of 1120 for these positives to continue. And I have a feeling we probably see 1040 before that. So not looking very pretty. I believe there's some pressure being built in. And it would be an unpleasant surprise if it shrugs off this impending negativity, negative divergence, crossover sell, lower top, lower bottom. Things are not looking very good as of now.
Okay, things not looking very good for Paytm. Of course, after the stellar rally that it has seen in the last 1 month, even on a YTD basis, the stock has done well. But just about have 1.5 minutes to go for the markets to open. In fact, less than that, just about 16 seconds to go for the markets to open. Although the GIFT Nifty was hinting at a mildly lower start, in the pre-open we just saw the Nifty at around 2470, down somewhere around 3-4 points or so, very flat. But yes, the first ticks have started coming in. Yes, it is a negative start. We are down somewhere around 30 odd points on the index, slip below that 24,700 mark, just around that level at the current juncture. The Sensex is down somewhere around 85 odd points, 80,951 on the Sensex, and even the mid cap index has started with a negative bias. No big cuts as such, but as the GIFT Nifty was indicating, we are seeing a mildly lower start. Let's see whether the bulls manage to fight back and come back from the early weakness. But good part is that the advance decline ratio at the onset is fairly positive and firmly in favor of gainers. The advance decline ratio at the current juncture 2:1 on the NSE. So yes, the mid cap index has managed to edge back into the green as we speak. The Nifty Bank index also trying to come back into the positive zone. Sectorally, all of the sectors ended the day in the green yesterday, barring the FMCG pack that saw very, very mild losses. We saw metals and autos lead from the front yesterday. Today, it's a mixed picture after a very strong recovery from the day's low yesterday. IT, of course, ended the day 2% higher, but today, right now, trading very flat, with a negative bias. Other sectors as well, they've slipped into the red, so to say. The metal pack is flat with a negative bias, pharma is flat, PSU bank index just about marginally in the green, but the bias is on the downside. If you look at the sectoral picture, autos also down somewhere around 0.3%. IT down 0.5% now. So yes, some slight bit of profit taking, at the in the early trade. But let's see. We also have the RBI policy decision tomorrow. So ahead of that, banks of course will be in focus. Right now, trading in the negative, the Nifty Bank index. In terms of the Nifty movers, IndusInd Bank, top Nifty gainer on the appointment of Rajiv Anand as the MD and CEO. The stock is up 2%. Coal India up 1.5%. Jio Financial up almost 1%. Bharti Airtel ahead of numbers today. up 0.5%. SBI reports numbers this week, it's up 0.5%. HCL Tech extending gains from yesterday. Maruti in the green, Hindalco also extending gains from yesterday. You have Trent in the positive, Tata Motors, all these companies will be reporting numbers this week and all of them trading with gains. What's not doing well is M&M, that's the top Nifty laggard. Infosys, SBI Life, HUL, Axis Bank, ICICI Bank, Reliance Industries as well did well yesterday. Today some bit of profit taking coming in here as well. So yes, all in all, a negative start, but nothing to be worried about as such right now. But markets are looking a little indecisive at the current juncture. Let's see. But the good part is that the mid-cap index is in the green and the advanced decline ratio is looking very strong, 3:1 on the NSE. That's the advanced decline ratio. 1570 stocks advancing to 500 stocks declining. First and foremost, Hemen, early blip, so to say. We started on a, kind of a jittery note. But do you expect a reversal? 24,700, we're just about holding on or clutching on to that level right now.
I don't think we are too affected by this Trump talk, which is there on a daily basis. That's why these markets keep on reacting like this. So having said that, I have a feeling that we need to sustain above 24,720 for around 15-20 minutes, Nandita. And I think that's possible despite this blip. So that happens, I still maintain your 24,800 is on the anvil if it doesn't happen today, tomorrow. But yes, I don't expect too much of weakness coming in. Yes, what has happened is that we've gone up from sub 24,550 to 24,700. We've basically given a 200-point bounce, Nandita. And markets are not that hunky-dory. The structure is shaken just a bit. So 200 points, maybe a 50, 70, 80-point decline, a blip is okay. But I believe a bounce is underway. Okay, it might not be a clear-cut one-way bounce, but bounce is underway. 24,800 and even 25,900 probably coming this week, Nandita.
Okay, 24,900 probably coming this week, but let's focus on some of these real estate names. Ubra Realty reported numbers couple of, last week or, just a few days ago. Numbers weren't all that great. DLF reported numbers yesterday, although profits and revenues were very strong, but margin-wise, some percent vis-a-vis 16.7%. In the same quarter last year. But real estate stocks have had a rough ride. Anything that's catching your fancy chartically, which could be poised for a rebound or which may be looking a little oversold on the charts?
I totally agree, Nandita. The near-term things don't look very copacetic. But yeah, if I were to, extend the time frame, if you look at the Nifty Realty Index, Nandita, it spent 13 years hatching eggs, virtually doing nothing. A rounding bottom for 13 years. Then we saw a mad move, which saw every decent or good, fundamentally good real estate stock being a multi-bagger. Now, it's like you can't run 2 marathons in a row. You have to wait for valuations to catch up, and stock also needs to take a breather. I mean sector-wise. So coming back to your question, I think if you have a view for probably 15 months or more, 15 months to 2 years, I think DLF looks good and Lodha also. But looking at the volatility and like you said, some not very convincing numbers, I would say spread your purchases. Don't go the whole hog one way. But I repeat, DLF and Lodha should be at least 25 to 30% higher in the next 15 months, the way I see it. But that does not mean it's not going to go down. This adjustment process is going to take some time, Nandita.
Okay, but DLF and Lodha may have a good ride in the medium term or over 15 months. Sona BLW, that's another stock that's in focus. It reported numbers, not really enthusing, so to say. Profits were down over 12%. Revenues slipped over 4% or so. Margins also contracted, came in at 24% vis-a-vis 28% on a year-on-year basis. The stock has been, under a fair bit of pressure. Looking at longer term charts also of 6 months or YTD, even the 1 year chart, the stock has shaved off over 30%. But today, of course, the stock is up somewhere around 0.5% right now. But do you see the weakness, or do you see more weakness on the charts, or would you say that it has hit a bottom?
We remain in a intermediate and longer term downtrend, Nandita. The short term picture is getting increasingly oversold. So I believe there is a cushion at around current levels, indicating a limited downside. But as of now, the positivity would be, what do I say, restricted to the shorter term charts. The longer term charts still don't look uh, very compelling. So yeah, a bounce is around the corner, but is it going to sustain? We'll have to wait and see. The recent swing high above 495, I think, okay, we're 10% below that, but only and only above that should technical positives sort of make an appearance, Nandita.
Okay, that's the view. Longer term charts still look, problematic for a Sona BLW. But let's talk about the paint space. I just, noticed that, of course, Asian Paints did see a burst of optimism in the middle, but, kind of fizzled out, so to say. It was attempting a comeback. The stock has been under pressure for quite some time, but last 5 days it did see a 1% gain, but it's fizzled out today. And Kansai Nerolac, that's the other stock, reported numbers. Profits were down 4%. Revenues, however, were up somewhere around 1% or so. Margins came in low at 14% vis-a-vis 15.5%. Paint space is, one pocket that has seen quite a bit of turbulence, right? But we did see some traction returning, especially for Asian Paints. What are the shorter term charts telling you when it comes to paints? Because wherein Asian Paints saw some recovery, Kansai Nerolac not really. So, is it, an avoid right now, some of these paint names, or would you play them for short term gains or, longer term gains perhaps?
I think I would go with your avoid statement, Nandita, because it's stock specific. Asian Paints is different because it fell off a cliff and we are seeing a recovery. So, coming back to what you said, shorter term, yes, things are looking positive. If I look at the medium term charts, things are looking positive, especially about 2500. We are not there yet. But like you said, longer term point of view, no, they look corrective, don't look very good. The structure has taken a hit. I think Asian Paints charts first time in 35 or 40 years we're seeing the situation. So no, if it comes off from 3600 to 2150, I mean even 26, 27, 2800 over some time isn't a big deal. But yeah, short to medium term things are beginning to look up. But I'd say a recovery, not a rally. For it to for me to label it a rally will take time and price. And like I said, first time in 35, 40 years, uh, Asian Paints is in a technical situation which is new to it.
Well, that's about paints, but let's talk about Godfrey Phillips. Stock of the day, so to say, up 9%, reacting to good set of numbers. The stock hit a fresh 52-week high of 9,881.5 today. Profits saw 56% jump, revenues in excess of 35%. Margins, however, came in at 22.7% vis-a-vis 24.8 on a year-on-year basis. But notwithstanding, the stock has seen a very good up move. The stock has over doubled, given over 2x returns in the last 6 months. Talk about cigarette plays. ITC cigarette business also did fairly well. Which one would you take a bet on?
Oh, Godfrey Phillips, Nandita, a little bit of a no-brainer. You said he's just gone up one way and it's been doing this. We are in a longer term uptrend since 1990 data. I don't have data before that. So 35 years of a longer term uptrend in place and continuing. So no brainer. expected to appreciate further. ITC, on the other hand, is has given a scintillating move. Now it's walked into a correction of a greater degree. So, if I were to say which one to pick, I believe Godfrey Phillips is the easier one, simply because we're catching a stock which is already in the third gear or the fifth gear, Nandita. While ITC is going to take time to consolidate. So if you're a safe player and you have the patience, I believe ITC is going to take time to potter around and then move up. So that way ITC is safer, stop loss is closer, less to lose. If you're a slightly aggressive investor, I think Godfrey Phillips is on a tear and you can ride the move.
Okay, ride the wave when it comes to some of these cigarette players. Godfrey Phillips, of course, great returns and of course looking good as well according to Hemen. But let's shift focus to some viewer queries then. I want to start with a query from Anunay Irinki, and he has a query on ABB which he bought at 5,600 rupees. He wants to know whether he should book losses or average and hold. Of course, the stock has been under severe pressure last week or so. Yesterday, of course, it was among the big losers after numbers disappointed. Even commentary wasn't all that great. The stock has shaved off over 14% in the last 1 month or so, and he's of course making losses. Would you advise averaging? How should he go about his holding?
Okay, no rocket science, Nandita, but currently daily, weekly, monthly, short term, medium term, long term, on all time frames is a sell. Obviously, the near term picture has been, I won't say distorted, but impacted by the numbers that you spoke about. Keep a stop loss at 4890. I wouldn't advise an average because, like I said, daily, weekly, monthly, I don't see any technical positives yet. Or keep a stop loss at 4890. Since we've come off from 60 to 50 to almost 5,000, an oversold situation might lead to a dead cat bounce. But no, it's not an average because, like I said, I don't see any technical reason to buy the stock currently.
Okay, that's the view. No technical reason to buy the stock. I hope that answers your query. The next one coming in from Varsha Gajjar. She has a query on Bharti Airtel. Numbers are expected to come out today. There is expected to be strength in the India mobile business. The company is expected to see a 2% growth in revenue on a quarter-on-quarter basis. The stock has kind of lost steam over the last month or so. Although a lot of analysts I spoke to are fairly bullish on Bharti, but from a shorter term perspective, how should you navigate this bout of correction that the stock is being witnessing?
I totally agree with you, Nandita. It has lost steam, no doubt. 6 year up move, 200 to 2000. I mean, it needs to take a break. Having said that, 1880 strong support currently over here. A bounce seems to be around the corner. The bounce should take it to 1970 and more. But the bigger picture is looking a bit wobbly. I think it's tired, like you said. Lost steam has had a humongous move. So I believe the laws of gravity are playing catch up. So not exciting, but yeah, if you do have a short term move, your 1880 can work as a stop loss. A bounce is underway, but once again, I would not like to play the results because markets have a mind of their own. But if I were to remove the results picture from my mind, I think we are heading towards 1970. That's okay, that's not much, but yeah, for a 50-point move in the current week, probably.
Okay, that's about Bharti Airtel. Hope that answers your query. Next one's coming in from Komal Makecha. He has a query on HDFC Bank. What is the right time to enter for fresh buying for next 6 months to 1 year? How are you viewing the stock post numbers? No fireworks when it comes to the stock movement.
Stock has given a medium term sell, so don't buy this at one in a single dollop. You can spread your purchases. I think 1955 is one level, 1910 is the other level, and 1880 is the third level. These are the three levels you can use to buy. HDFC Bank currently is found a rounding top Uh, I mean, one should not advise this for an investor. Frankly speaking, it looks like a short. But with the credit policy around on the anvil, I would be careful about doing such things. But technically, it really looks weak from a short to medium term point of view.
Okay, that's the view on HDFC Bank. Hope that answers your query. Next query is on a Varun Beverages coming in from Naveen. Now, this stock has also, kind of lost some bit of fizz if you look at the last 5-day performance. But I think stock had seen a good traction right from since 25th July, last 10 days. Are you hoping for more fizz on this one, Varun Beverages, and should one buy?
I would prefer to buy the beverage than the stock, Nandita. Uh, it's in a 1.5 year hiatus. Uh, it's walked into a correction of a greater degree, but yeah. Having said that, I think we're seeing a little bit of repetition of the view, Nandita. Multi-bagger, tire, going to take time, but yeah, short term it's given a move. Now we are retracing the move, but the medium term picture seems to suggest that we could be heading towards 570. So if you have a short to medium term view, it's a buy on decline. Long term picture is corrective. So I don't think there's anything that exciting, but yeah, short to medium term base has been formed, and we're looking at some more upside.
Okay, that's the view on Varun Beverages. The important point is buy the beverage, not the stock. That's the view. But last query then, how are you viewing textile stocks after the higher tariffs levied by US on India, especially the likes of Welspun Living? Would you, turn away from these stocks now? Alex has a query on this particular pocket.
I don't track them very closely, Nandita, but Welspun Living, I just looked when you mentioned, uh, not particularly bad, but yeah, there is a negative overhang, but frankly speaking, this has been there before this Trump talk came in, honestly speaking. So, and if the company is fundamentally sound and these, I think, slightly silly uh, tariff moves are going to not change the picture completely. See, this stock has already peaked in August 24, Nandata. So a decline and whatever you say has been in the system even before all these near-term disruptors have come in. So I say nothing much to lose. 115, 105 are support levels. Nothing exciting. The stock has moved from 60 to 210 and it has virtually gone to sleep. So nothing, not negative, not positive, going nowhere, the way I see it. I'd have a neutral view.
Okay, a neutral view on Welspun Living and all the textile stocks as well. But Hemen, before I let you go, any recommendations for viewers this morning?
Yeah, I have a couple of stocks. Firstly, a buy on TCS. Like I said, I believe an IT bounces in the offing. It maybe doesn't unfold exactly today, Nandana, but is there in the offing. This is probably a 2-3 week point of view call. One can buy TCS at 3070, stop loss 3020, target 3170. I believe it's a modest target. It should get overshot. The second one is JSW Energy. Stock looks interesting, Nandita. It's already moved. It's been moving sideways. Today it's going to overcome the 55-week EMA. Has taken support on the 55-day exponential moving average. Oscillators are supporting the move. Volume spike. Everything seems to suggest that JSW Energy is going to give a nice swing up move. So I'd say this looks good at, okay, it's moved a bit, but I'd say buy at 535, stop loss 515, target 575. Nandita.
All right, TCS and JSW Energy, two recommendations coming in from Hemen. Hemen, lovely chatting with you. Thanks a lot for taking our time and joining in and helping our viewers navigate their holdings and queries as well. I look forward to more conversations. We've not been having a lot of conversations of late.
Absolutely, Nandita. I shall do that more diligently now. Thank you for having me.
Thanks a lot. Wish you a very happy trading day and a good week ahead.
Same to you, Nandita. Same to you.
Thank you. Well, on that note, just take a look at the market. the weakness has kind of intensified a bit. It was a quiet start, but now we are below that 24,650 mark. It's a 0.3% kind of a cut. The mid-cap index has also slipped into the red. It was trying its best to hold on, to the positive territory, but couldn't really do so. But the breadth is still in favor of gainers. And of course, IndusInd Bank, that's the top Nifty gainer, 5% up on this particular counter. On that note, let me bring on board our next market voice, Mayuresh Joshi, Head Equity Research at William O'Neill, India. Well, Mayuresh, lovely to be chatting with you again. Hope you're well. But looking at the markets, what are you really envisaging now? Of course, we have the 7th August, the new day when, 25% tariff expected to kick in for India. But given the fact that we have had, new threats from Trump saying that, okay, higher tariffs if you continue to buy Russian oil, markets seem to have digested that pretty well. Although we've started on a negative note, but the cuts aren't all that big. How much of this news is already digested, and do you expect any big move in the market either on the upside or downside here on?
Morning, Nandita. Always a pleasure to be on your show. Now, again, I think two things. One, I think that uncertainty still lingers on to the market, and therefore, I think the market is taking a very stable and a structured view as we speak. But what will come out in reality is something that the markets might then react to. Obviously, I think with the tariff imposition, the expectations of what kind of penalties might come through, the statement that has got released by the government yesterday as well, all are testimony that they are still in negotiations, the discussions are still well into the on, and they might very well continue. And therefore, I think this uncertainty is something that is lagging our markets as we speak. And let's not forget that quarterly earnings were muted to a certain extent. The hope here is that corporate earnings might revive in the second half. And therefore, I think how this plays out is going to be extremely critical. At the same time, I think the US data points itself are looking a little bit more shaky as we speak. And with tariff impositions, with expectations of inflation, does the Fed move on a rate cut in the September policy and follow that up if it still remains a little bit worse off? In the December policy or the November policy as well, is something to be seen. Again, markets are at rich valuations in the US as we speak. And therefore, I think there is a lot of uncertainty across the globe, which is obviously being reflected onto the Indian markets. How will the markets move from the current levels? I think looks improbable for a huge move, either on the upside or the downside, assuming all these conditions put forth. And therefore, it might be a consolidation trade. For the markets, what we're probably going through in the last few weeks and months, that might still continue for the next few weeks.
Point taken, Mayuresh, but you alluded to the earnings season, and I'm just coming to that. Earnings have been tepid, but as you said, second half is when we could see some bit of recovery. But what have been the key 2 to 3 takeaways from this earnings season for you, and which pocket would you play for a recovery in the second half?
So I think it was expected to be tepid, right? And therefore, I think the expectation largely is that with expectations of consumption expected to make a very strong comeback, the second half might be relatively better. Obviously, I think the first and the second quarter is where monsoons also play its part, and therefore a large part of the capex move probably remains subdued, but they make a huge comeback in the second half as well. Government capex is still expected to remain extremely strong. There is hope that private capex, which has seen sign of revival, should start coming back as well. And if all these factors start coming through, I think the second half is where I think there will be some element of recovery taking place. Obviously, there have been outliers, right, in this earnings season as well. L&T, decent set of numbers. You've seen good commentary coming in from the behemoths, including the likes of an HUL as far as the consumption basket is concerned. Within banks, ICICI Bank, decent set of numbers. And therefore, our own sense is that as we head into the second half, selective NBFCs, selective financials might continue doing well, because the kind of calibration that they might need to do when it comes to their lending book, I think that might protect NIMs and stabilize NIMs going forward. At the same time, I think agrochemicals as a space, which I've always liked, the very good set of numbers might be expected to continue with better monsoons, expectation of a better Rabi season. in the second half as well. Selectively, autos might continue doing well. Yes, there is competition. Input costs have gone higher, but the expectation largely is that with rate cuts which have taken place, with volumes expected to remain stable going forward as we head into the festive season, selective auto names can continue doing well. And within the broader market, I think consumption, which includes some FMCG stocks, some alcohol beverages stocks, some apparel stocks, might actually start doing well as well. So I think these certain pockets, in my opinion, is where earnings can still continue in spite of global volatility and has no concerns as far as either tariffs are concerned or global trade wars.
Sure. Since you alluded to, autos and two-wheelers as well, Ather reported good set of numbers yesterday. The stock saw good reaction to that as well. Revenues almost 80% jump, losses also narrowed. Market share for Ather has been fairly resilient, but EV penetration in India is still slow, right? So, do you see that as a key downside risk going forward for some of these EV players?
No, whether it's EV or power, Nandita, I think let's assume and let's believe that though it's a structural story, it's going to take time, right? Because the transition for the Indian ecosystem is not going to be easy. For EVs, as you ask, I think the infrastructure development and infrastructure needs need to be greatly improved. And it's not just for India, I think it's across the globe as well. And therefore, I think as this phase plays out over the next few years, and you really need to talk about the next 5 to 10 years, as the transition probably happens, both in terms of launches which are happening, whether it's two-wheelers, four-wheelers, or the infrastructure that is critical in terms of the support mechanism. I think all these things will evolve. But at the same time, I think hybrids, at the same time, internal combustion engines will also play its part as this transition happens. And it's a similar story for power, right? We keep on harping about renewables. But as this phase happens, the government target 500 gigawatts from 160, 170, I think that's going to take a good 8, 9, 10 years. And therefore, I think thermal is going to play its part as this transition happens. So I think India is a unique story where the transition is going to happen. It's going to take place. But at the same time, I think there will be good stories over the next 4 to 5 years in both these spaces put together.
All right. Also want to talk about the RBI policy outcome. Of course, the hopes are that it will be a dovish pause. That's the expectation, so to say. But given the fact that we have inflation comfort, 6-year low, what are your expectations? Are you expecting a surprise cut, or do you think the RBI governor, since he gave quite a few surprises last time around, that's about it for this year?
I think he's front-loaded that, Nandita, very clearly. Now he'll want to wait and watch, right? In terms of how data points are coming through. Obviously, inflation is under control, but he'll still want to wait and watch because of the front load that he's probably done. And he'll like to wait and watch on the global developments because of tariffs. What is the secondary effects that probably happen, not just in the US, but across the globe? Are we looking at some sort of an imported inflation? I think that's the biggest risk that I am perceiving at this moment. And therefore, I think it's going to be a wait and watch as we speak. How does the Fed move in September? I think, as I just mentioned in the opening remarks, there is certain bit of hope, and the probability probably is increasing every passing day with data points coming through for the US, that there might be a rate cut as September comes through. And therefore, I think all these data points is something that the RBI will probably monitor. So I think it's going to be a pause clearly this time round. They'll obviously wait for how data points evolve, take a look at how global markets are evolving, and then take it to the next pause.
Sure. Of course, we'll all be watching out for the decision tomorrow. And of course, let's see what the RBI governor does this time around. But, we had a query on our feed just a few minutes ago where this gentleman was asking about what to do with textile stocks. Now, given the fact that, we are staring at a 25% tariff, other players like Bangladesh, Vietnam are looking at relatively lower tariffs. So, what do you do with some of these, textile companies now? Are they a complete avoid?
So at this juncture, I think it's better to wait and watch. I think for two reasons, Nandita. I think one, even though our players are having integrated operations, a few of them, including the likes of a KPR, including the likes of a Vardhaman as an example. I think what really happens in terms of the export market is the price sensitivity. And because of tariff imposition, obviously, I think countries like Bangladesh and Vietnam and China. And what happens with China is really an uncertainty. But at least at this point of time, Bangladesh, Vietnam, Pakistan, I think they might just have a slight bit of an upper hand. Obviously, what evolves in the finalities over the next few weeks, whether India is able to strike a decent trade deal with the US, I think that is going to be critical for our players. And therefore, I think competition intensity, obviously, with our neighboring countries is something of a concern. But there is also a lot of instability, right? Bangladesh is going through its own political instability. Pakistan has its own economic instability. Vietnam probably has a decent kind of an operational base at this juncture. But does it have the scale to compensate any kind of volume loss, either from Bangladesh or Pakistan for that matter? I think those are the questions we need to ask ourselves. But at this juncture, clearly, as we speak, there is a lot of uncertainty. Obviously, certain players have started establishing facilities in the US. Case in point being Indocount Industries as an example, where they're having a greenfield expansion done in the US itself with investments. They have done acquisitions in the US market as well. How does that play out in lieu of all these tariff impositions? It's going to be interesting. So I'll keep a watch on Indocount Industries. But again, it's not a go out there and buy out there right now. I think it's a story that will evolve because of its sheer expectations of investments within US, expectations of capacity expansions, and the acquisitions that they've done in the US, which might be a relative of a shield factor if these tariffs continue at a high rates, and if that does have an impact on other players on volumes.
Okay, that's the view. It's not a complete out and out buy, but it's a wait and watch approach that you need to take for the textile space. I also want to touch upon the EMS space. So to say, we had numbers from the likes of Dixon recently. It reported good set of numbers, and of course, the company is also looking at newer revenue streams now, right, with the foray that it has made in camera modules, etc. So do you see this as significant earnings driver for Dixon, for the likes of Dixon, especially given the fact that they are facing stiff competition as well, right?
They are, and they're introducing new business verticals, which is a very good positive. So I think the kind of revenue growth, Nandita, which will keep on coming through, will it be significant for a player like this? And there is no two ways about it. I think the only issue that lingers is margin improvement. At the end of the day, I think the ODM part for all these EMS players, which is the original design and manufacturing, which has a greater share of margin contribution, is something that will play a role in terms of re-rating of numbers. So even if your top line grows at a significant pace, but your margin expansion does not happen, your earnings will not grow in tandem with your top line growth. And therefore, I think the ODM component, it's not just for Dixon, but for other EMS players as well, should show significant accretion. A lot of players are making conscious efforts to probably ensure that the ODM part and the component probably goes higher. But I think it is going to take time. And therefore, the valuations at which they trade and the margins at which they operate out of, it's a little bit of a mismatch. I think any mismatch in terms of reported numbers and the re-rating and the de-rating might be quite significant. So I think elevated valuations, late stage basis as we see. So I think a little bit more careful when it comes to being aggressive on all these players at this stage.
All right, got your point. I also want to shift focus to the real estate space. Stocks have had a wild ride, not all that great. But there seems to be a lot of interest around REITs, right? And today we have Knowledge Realty Trust IPO opening as well, 4,800 crore rupee IPO, and it's backed by Junjunwala as well. So would you say that it's a good time to play this entire space via REITs rather than individual stocks like DLF and the traditional stocks like DLF and Prestige, Oberoi, etc.?
Possible. And again, I think REITs is a complete story, which the Indian markets is getting used to. I think it's a very mature kind of a space when you talk about developed markets as we speak. And therefore, I think with commercial real estate gaining more momentum, a lot of consolidation that is happening within few key players, I think interesting space to be in. Again, let's not forget the leasing players as well. There have been a couple of players who are already there, a new listing which has happened for players who are building in leasing capacities, workout spaces as well. I think that is going to be a growing space in India as well. So interesting, but one really needs to be very, very selective within both these markets.
Okay, that's the view. Well, with that, Mayuresh, I would like to thank you for taking out time and joining us this morning. Lovely chatting with you, and a lot more questions, but I think let's get RBI policy and the August 7 deadline out of the way, and then we'll touch base again and have like carry on with our conversation as well. Thanks a lot for
Oh,
taking our time and joining in this morning.
always a pleasure. Thanks.
Thank you. Well, on that note, let's take a look at what the markets are doing. Well, yes, the weakness has only exacerbated because right now we are staring at a triple digit cut on the Nifty. It's down over 100, 24,600 and 380 points down on the index, mid cap index as well. Now started underperforming benchmarks, is down over 0.5%, and the breadth has also turned in favor of laggards. So it has turned now 1:1 almost, but of course more tilted towards the losers. What's contributing to the losses are the likes of some of these defense names like Bharti Electronics, which saw buying yesterday. Some of the likes of Infosys have also slipped into the red. Reliance Industries down almost 1%. Even HDFC Bank continues its weakness. Some of these FMCG names are under pressure as well. The likes of HUL, Trent, Asian Paints, Eternal, ITC, all of them are trading in the red. So the list of laggards is longer than the list of gainers. IndusInd Bank, even that has pared some of its gains that it was making just a few minutes ago. It's halved its gains, almost 2.9% higher now. At one point it was up somewhere around 5%. Grasim, Bharti Airtel, Axis Bank and SBI are among the gainers, and so are the likes of Eicher Motors and Maruti Suzuki. Kotak Mahindra Bank and Axis Bank and SBI, these are some of the banking gainers. Remember, we have the RBI policy decision tomorrow, and ahead of that, of course, banks are in focus. The Nifty Bank Index itself is down somewhere around 0.2% or thereabouts. So not looking all that great. Let's see whether the bulls manage to fight back again today or not. Yesterday it was a out and out positive session. We saw strength throughout the day. Today looking iffy at the current juncture, but let's see if the bulls have it in them to fight back and come back in the green. But with that, we have come to the end of this edition of Opening Bell. Would like to thank you for joining us and staying with us throughout the show. But we will be getting you closing bell at 3:30 p.m. So don't forget to tune in for that. I'll see you then. Have a great trading day and come back and join us. Thank you.